All right, we're live, just to let you know. Good afternoon, everybody. Welcome to our next hot stock panel for the month of February. These are 7 more stocks to love or leave, and these are in the clean energy space. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to be here, and because it is the month of February, the month of love, we are offering 2 hot stock panels this month. Last week it was on marijuana stocks, and this week it's going to be on clean energy. If you can hear us loud and clear, please type in the chat, let me know where you're coming from, or just type in VV Nation nonetheless. Thank you for all of the people who support the channel as we go along. For those of you who are not already subscribers to the channel, we're going to invite you to also be supporters or subscribers of the channel. Once again, glad to be here. I'm joined here today by 2 of my esteemed colleagues. That means they're hot because they're steamed? I don't know. Anyway, it's Jim Penn and Steve Chappell, the same 2 that were with me for last week's panel, and I'm glad to have them back. I love the insight that they give to the hot stock panels. I think that every person that we have that comes onto the panel brings a lot to the table. All right, so you're going to get well-rounded information to help you guys make decisions on what you want to do or don't want to do nonetheless. All right, so again, as we go along through the presentation, if you like what you hear, hit the like button. If you're not a subscriber to the channel, hit the subscribe button, and don't forget to hit the bell icon to be alerted to any new content that comes up. All right, I'm going to start off this presentation today with 3 of my stocks to take a look at. We have a watch list of 7 stocks, and you're going to have an opportunity to see why we like them or why you want to leave them. All right, again, the month of love. All right, so here's our watch list today. As you can see at the top, we do have our 7 stocks. They're all located here, and they're sorted by our master indicator. So the stocks that you see in this watch list are not just willy-nilly thrown in. They are sorted by our master indicator VST. Very quickly as I start, I'm going to go over some of our indicators and tell you why they are as important as they are from the standpoint of analyzing a stock, because that's important to know what to do or what you're looking at. You got to do your homework before you pull the trigger on any trade. So let's start off with my 3. Now, noticing that REGI is at the top of the list by our master indicator VST. Notice my stocks, all 3 of them, are towards the bottom of the list. Well, it is what it is, but I'm still going to talk about why I like them or why I don't like them. Starting with iClean or ICLN. If this industry, we're talking about the clean energy industry, and it looks like overall, whether it's here or whether it's around the world, a lot of people are trying to reduce their carbon footprint by going more clean energy. Clean energy encompasses oil, electric, it's not oil, electric, wind, solar, water. Those are all of the things that are in that clean energy space or renewable energies. So we're trying to get off of fossil fuels, and I think that we have an administration that is currently in place who's in tune with pushing forward or advancing that agenda of clean energy. So from that perspective, I always try to talk about at least one ETF for those of you who are out there who want to play the whole industry instead of honing in on 1 or 2 stocks. Now, don't get me wrong. Some of the stocks that we'll talk about today can give you big moves in the market as a stock. But when I look at ICLN, iShares Global Clean Energy, that gives you an opportunity to play the whole industry, which looks at a lot of the stocks that are in there. And as I look at that, as I start off with iClean, I want to let you know that that ETF tracks the movement of 30 individual stocks. Some of the stocks of note, Phase is one of the stocks that are up there that we're going to look at today. Canadian Solar, PowerCell, FCell. Let's see what else is in here that is big names. Those are some of the biggest names that are tracked by ICLN. So some of the stocks that we already know are already incorporated in that ETF, and it's a good way to take advantage of those stocks by playing one ETF. Now, there's a downside to that. Some of the stocks in that ETF may go down, which will help to bring that down. But overall, if the industry is rising, then that ETF should rise. So that's definitely one that I love. As I go down the list to Jinko Solar, interesting, when you look at solar energy, I've got some numbers that show that solar energy has gone down considerably since the year of 2010. So as I look, solar costs are down by, I think my number was about, cost of solar energy has declined by more than 80% since 2010. That's a big number, which means more and more people are jumping on board with solar energy. And we could see another 25 to 30% coming into the end of the year. So it's my notes here say that solar is to become the cheapest form of U.S. power by the year 2030. So that means that people are jumping on the bandwagon for solar energy, as well as electric and all of the other things that encompass clean energy. So solar is a big player, and as we look at some of these other stocks, you're going to see otherwise within that whole industry, different places where you can strategically place your money to take advantage of this rock and rolling industry. As I look at the price, is trading at $63.82 with a value of 103. One of the stocks that are, as a leader that is undervalued in the software. Sometimes it's hard to come by in the current market's condition, but it is one of the stocks that is undervalued. And very quickly, let me go through our core proprietary indicators. Relative value, relative safety, relative timing, and VST are all cast on a scale between 0 and 2, where above 1 is favorable. Relative value looks at a stock's long-term price appreciation potential as compared to an alternative investment in a AAA corporate bond. This indicator above 1 tells me that the stock should outperform the AAA corporate bond. Relative safety, real simple. It is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. What's the engine that drives the stock's price higher? Earnings. Relative safety incorporates a lot of the earnings capability behind the stock. Does this company meet or exceed earnings quarter over quarter, year over year? Above 1, the stock has a high probability of meeting or exceeding its earnings expectation. Those are our fundamental indicators. RT, on the other hand, is our technical indicator. It looks at the short-term price trend of the stock and tells me a couple of things. Is the stock in an uptrend? How far in an uptrend it is? All right, and as I look at those things, especially in relative timing, looks at 4 different time periods, it gives me a good depiction of if the stock is in an uptrend and how much of an uptrend it is. The higher above 1 it is, the faster the stock is in an uptrend. So as I look at relative timing on Jinko Solar, it's sitting at 1.05. So Jinko Solar, from a fundamental standpoint of RV and RS and a technical indicator of RT, is above 1 across the boards. VST is at 1.22. I just talked about how earnings is the engine that drives the stock's price higher. Earnings per share on Jinko is sitting at $3.71, but the more important thing is they are growing their earnings at a clip of 22% a year. So positive earnings, growing it at a clip of 22% a year in an industry that is rocking and rolling, that's why I like Jinko Solar. Now, on the other hand, what you going to leave? Who are you leaving? Well, that would be Sunworks, SUNW. Stock is trading at 21 and a quarter with a value of 79 cents. That's what we feel the stock is worth. Because this industry is rocking and rolling, people are willing to pay a premium to own this stock. Now, having a stock that's overvalued doesn't mean it's a bad stock, but if we take a look at the further analysis, we can get a better understanding. The upside potential in the stock is not there. It is, bar none, very minimal. So a AAA corporate bond should way outpass Sunworks over the next 1 to 3 years. Relative safety below 1. This is more of a risky stock. Normally, when I look at a stock with a relative safety below 1, the stock may or may not meet or exceed its earnings expectation. Remember, earnings is the engine that drives the stock's price higher. The only thing helping it right now is the technical indicator, relative timing. It is at 1.76, so the stock is moving up, but fundamentally not sound. So this is more of a trade, whereas Jinko Solar would be more of a longer-term hold. So the beautiful thing about utilizing the VectorVest software is the ability to see within the same industry which is the leader and which is the laggard, and to make sure that you're with the leader and not with the loser or laggard, all right? So I had to put that out there. And negative earnings per share, the company's not making a positive earnings, and they're growing it at a negative clip. Maybe it's the way that the company is run. I don't know, but as I look at it, I'm not comfortable holding this stock long term, but I look at the relative timing and I understand that this is more of a technical play. So if you're a technician or more of an aggressive trader, you might want to jump on board with this, but as a way of holding, I'd rather look at Jinko Solar as a way of holding the stock a little longer in this space. All right, so that's my analysis utilizing the power of the VectorVest software to give me an understanding of which stocks I'm willing to buy and hold and which stocks I might be willing to just trade. Now that they're all highlighted, I'm going to right click and I'm going to go view the stock graph. And I always like to look at a 3-month graph. Why? Because what happens every 3 months on a stock, earnings, and if earnings is the engine that drives the stock's price higher, I want that in the picture. Now on my graph, I also have a 20-day exponential moving average. Moving averages are best used when a stock is trending, more so when a stock is moving sideways. So I have other indicators that I can use for a sideways moving stock or market, indicators like RSI or what the heck is my stochastics? If I throw stochastics on real quick, I can see even though the stock is moving sideways, it is not a point at being overbought, which would be the level of 80, and it's not at a point of being oversold, which would be at a value of 20. Right now, the stock is just moving along, but as I noted, the industry is rising. I would keep my eye on that. And if I own the stock, when the stock drops below the 20-day exponential moving average, that may be an opportunity to take some off the table or take it all off the table and wait for a better buying opportunity, which in this case for me would be buying higher than the high. As I see the stock hit a new high over the last 3 months, back here on January 8th of this year at a value of $32.25. I'd like to see, if I'm not in it right now, I would really like to see us take out that level of resistance. Now, that gives me about $3. If I don't want to leave that $3 on the table, then maybe I trade it as long as it's above the 20-day exponential moving average. Wouldn't do it today, though, because I always want to make sure that I buy on an up day when the candle is green, more so when the candle is red. As I look at volume is pretty steady, not above the average volume, but pretty steady. Relative timing is above the value of 1 and also leveling out as the stock's price is as well. And as I mentioned, because the stock is moving sideways, stochastic is not in overbought or oversold. So actually, I'm going to take that back off. And if I look at utilizing support or resistance, I'm going to draw a level of support right about here, which was a beautiful level of resistance back here, sitting at the value of $29.36. So that could be a definite line in the sand, especially if you're looking to hold the stock longer term. But keep in mind, the stock is moving sideways, but still above that 20-day exponential moving average. So from the standpoint, if you own it, leave it alone. You've got a definite line in the sand as your level of egress. If you don't own it, could you buy it now above the 20-day? Sure you can. It's a little bit more aggressive, and probably I would use the high as a level of taking half off of the table. Preferably for more confirmation, I'd like to see the stock take out the high. All right, so I'll open up the floor to Steve and Jim to give their feedback on the stock. And again, I think I like it more so for the purposes of taking advantage of the whole industry. Whoever wants to go first.
Take it away, Jim.
Okay.
Yeah, Glenn, I like the idea. I was going to talk about an ETF that tracked it as well. ACES is the symbol, ACES. But the same idea, we talked about it last week, even the marijuana stocks. If you want to be practical and boring and you want to take advantage of an industry that's rising, then that's what we want to look at. So ICLN, I believe ACES is also iShares, if I'm not mistaken. But I like the idea of the ability to take advantage of the entire industry because, I know we titled it Pick Two, ones we'd like to leave out, but this industry, I think, is not going away anytime soon. So the ETFs are a great way to play it. So I like that idea.
Okay, Steve?
Yeah, just I haven't looked at this particular symbol in a while, which we said is representation of the entire space, right? So, well, at least their cross section of the space in terms of who runs the fund. It's interesting. It's kind of telling. It seems that there's been some rotation out of clean energy. I think you had it hit on the head pretty well in terms of the next best buying opportunity on the ETF level is probably when you take out the high that he's circling there. Yeah. Because what I see right now actually is a bit of a downtrend brewing. You have 2 lower highs and 2 lower lows. So we don't want to make a third one because that third lower low would put you below support, and who knows where that low ultimately would land. So I think you had the right recipe. I just wanted to emphasize it. If I'm going to go the ETF route, I want to see some pretty good improvement here. I don't want to flirt around too much with the current stock price situation. Wait till it gets back towards a high.
All right. So there's where we stand, and I definitely see that level of where Steve said, and that's what you were looking at right there, right, Steve?
Yeah, it's a downward trend.
Yeah, and for me, I think this current level of support sitting at that 29.36 is a telling sign, and he's right that if it does break down below, that's probably an opportunity that if you still hold it, you probably want to take your profits on the stock. All right, my next stock is Jinko Solar. Now, you sit back and you look at this and you go, what the flying flip is he talking about as a hot stock to take advantage of? Well, the stock is sitting in a little bit of a channel. Again, a little bit of a sideways move. For me, in looking at Jinko Solar from the fundamental standpoint, I like it. From the technical standpoint of looking at the graph, I see that it's in the channel, and Steve did hit the nail on the head by saying there's a little bit of rotation out of clean energy, even though it's still a hot industry. Again, from the standpoint of trending, stock is sideways, so moving averages are not nearly as useful in a sideways moving stock, but I look at stochastics. The stock is right now at a level of being oversold. It could be poised to rise again as it did back here. Where did it rise? To that level of resistance. Back here, it was oversold. Where did it rise? To that level of resistance. I think that level of resistance is going to be a good point to see if the stock is going to have the ability to take off and rock and roll again. It has been hit 1, 2, 3 times in the zone, a couple of other times. I like the ability for it to break out above that level. RT, even though it's hovering around the 1 line, it is trending a little higher. I'm getting higher lows on RT, which could be posing a great buying opportunity. If I don't own it now, I would like to see that stock get above that level of resistance of 76.15. But again, more so than a technical basis, I like it from a fundamental basis in an industry that is moving. Jim?
Yeah, I think, again, I mean, if you're going by a graph or a chart, there's a couple of ways to look at it. I always thought, and if you're looking at it from a technical standpoint, you're right. It's basically moving sideways. We want to see it. It's not retracing from support. It's not breaking resistance. From a technical standpoint, it's difficult to see. But again, we're talking about an entire industry that, as I said, isn't going away. Now, the only thing I can think of here is it's a solar stock. Electric vehicles are kind of taking the headlines right now. Can that be a reason why some of these aren't moving the way we want them to? But I like the entire industry and the entire idea that, as you mentioned earlier, this administration is going to push this, and this industry is going to continue to rise. Now, exactly where your entry point is, if you want to look at it very, technically, that's going to be up to you. But I wouldn't push all the chips on the table on any one stock anyway. at least not in my account that my wife doesn't know about. But hey, listen, it's a great stock. You look at the VectorVest analysis, it's a wonderful company.
Steve-O?
Yeah, no, I reiterate everything Jim said. Ditto. But what draws my eye, it looks a bit like a Head and Shoulders. I'm slightly concerned about the low. So as long as we stay above that low support zone that you pointed out, as long as we stay elevated from there, then you're above the neckline of the potential Head and Shoulder pattern. This stock did get super, super, super hot. So you want to definitely make sure that holds. That's it.
All right. And let's go to my last stock. Now, you look at this. I drew a level of a wedge on this. Patrick France is really much better at drawing that wedge. But, Steve, I'm going to ask, as you look at this, do you like that wedge, yay or nay?
Yeah, I don't think you need to accommodate all the way from the prior low point. I think you just connect the most recent 2 points. But I guess what you had to draw it that way because you don't have another pivot. So yeah, no, it's fine. You're in a triangle. That's fine.
All right. So Sunworks was my stock that I did not like. And it was more so from the fundamental standpoint. But as I look at relative timing hit a little bit of a high back here on January 22nd at a value of, just had a value. Dag nabbit. Where's that value? There it is, a value of 2. And now look at where it's sitting. It's sitting at a value of 1.75. Not tremendously off the high, but a pullback nonetheless, along with the stocks sitting in a little bit of a wedge. Consolidation. I'd like to see which way it's going to break. And if relative timing is slowing down a little bit, volume is slowing down a little bit. A little bit of an update today, but a lot of wick at the top. Possibly a shooting star pattern, which could be a reversal or a level of a start of a pullback. A lot of selling pressure on today's candle. So we have to see which way it breaks out of the wedge. From a technical standpoint, from a fundamental standpoint, I'm not feeling it. But on a technical standpoint, could be pointing to the stock's ability to break to the downside of the wedge. That would be step number 1. Step number 2, even though it's above the 20-day exponential moving average, we'd like to see if it would break down below that. This is just not one that I want as compared to Jinko Solar, especially from the fundamentals. All right. So, Jim?
Yeah, I don't have too much to add. I mean, I like that, if I don't use the 20-day as much, but it does seem to have stayed above that 20-day. Honestly, the graph from a technical standpoint looks a little better than the previous graph. But you're right, the fundamentals are not there. But as I'll talk about on mine, it's hard to look at these newer stocks, these smaller companies, and really focus on just the fundamentals. So to see. But.
Steve-O?
I echo those sentiments. I think the technicals actually look fairly decent here. I think the fundamentals are awful. So it's a trade, not an investment.
There you go. All right, so those are my 3 stocks for this session. Real quick, couple of things that I want to add. For here today, we will be giving away a mug. So the keyword for the mug this week is going to be hashtag VVNation. Oh, wow. It's Joey. Say hi, Joey. All right. Joey's my producer. So no hashtag VVNation. Just type in VVNation to be entered in for the mug. Don't type a hashtag or else you won't be eligible. So VVNation, number 1. And number 2, as we go through some of these stocks that we're trying to look for maybe some type of a swing trade, we are offering a swing trade course that's coming up, starting up real soon. If you go to www.vectorvest.com/PST for precision swing trading, there is a course that we're offering that you can take advantage of. You gonna put that up or do I need to put it up? I can put it up. There we go. There's our course for the precision swing trading course. Go check it out. Go take a look at what the topics are. It comes with group coaching, what resources are there, and so on and so forth. And You can see there's a big discount on the price for the course. All right. So those are my two things I want to add. Where's the mouse? Oh, let's minimize that. And my next person up is going to be the one, the only, the incomparable Jimmy Penn. All right. I've always wanted to do that. Don't know why, but I got to do it.
I don't know why either, but that was good. Thank you, Glenn. All right, Joey, what do? I got to hit request control. Does that work?
Yep.
Hit request. And I think that gets me on there. There we go. All right, great. Thank you, Glenn, for that enthusiastic introduction. Thank you all for joining us, all the folks out in the chat room. I'm trying to follow through the comments and all as you guys go through. Thanks for taking the time to be here. For those who don't know who I am, my name is Jim Penn. I'm the manager of retirement services. I've been here at VectorVest for about 14 years now, and it's always fun to be on the panel with Stephen and Glenn. And let me get right to my stocks. The two stocks that I've chosen for today are GEVO and XROFF Tech, or XROFF as we call it. The F is there because it's actually based in Canada, so it's a foreign stock as far as we're concerned, but we track it here. And I'll talk a little bit about them. The GEVO to start with. I chose these two because they're a little different, right? I was mentioning Glenn's JKS was the solar, there's water, there's turbines, there's all kinds of different clean energy that's out there. So I tried to take at least two that were a little different. GEVO uses, they try to replace petrol fuel and chemicals with lower carbon materials so that, you know, it is still fuel based, but it eliminates that carbon footprint that it brings. One example for GEVO is that for the airline industry as one example, they're able to use this type of fuel. They can keep their current infrastructure for their fueling, for their equipment that they use, but it just lowers the carbon footprint a lot. So that's what GEVO tries to do through their lower carbon chemicals. So it's a little bit different than a solar panel or something like that. That's why I chose GEVO. And then XROFF is a very, well, you know what, I'll just do GEVO first here. So if we look at it, listen, fundamentals are, I was commenting earlier, fundamentals really aren't coming into play here, right? You're not going to find GEVO right now in ruler stocks, you know, with a relative safety of 1.4 or higher. Not yet, anyway, right? It'll take some time. It's overvalued. It's got a low relative value number. It does have a positive earnings growth rate, even though earnings are negative at this point. But when I look at this industry and I look at what's happening and the headlines we read and the stories we read, I'm looking at these companies not so much based on the fundamentals here, but on the potential of these stocks, right? There's a lot of examples, Tesla and Amazon. How we used to tell the story, Steve and Glenn, you guys remember, Amazon was super overvalued forever, right? And Tesla was as well, you know, way back years ago. I'm not saying these are going to turn into those companies, but the point is we don't know. If you believe in the industry and you believe it's here to stay, these are good ways to go. Now, having said that, I will say this. Steve has renewable energy. That was one I was gonna choose. So I was gonna go the fundamental way, but Steve got it. So Steve's smarter than I am. He knew to grab that one first. So, but anyway, GEVO, based on fuels, the low carbon fuels. I like the idea of that. It's one facet of the of clean energy that I like. If we take a look at a graph, let's see, that's small. Okay, there we go. I'm going to set it to a 3-month graph to take a look at the 3-month look. And we could leave the 20 on there. I'll leave all these things that Glenn have on there, but we see the stock moving up. I'm not a big stochastics guy. Mostly what I focus on is, for me, is support and resistance is a lot of what I try to focus on, but I do see that GEVO has broken through, this resistance level that we're at now. The RT obviously is very high. It's got a nice 3-month look on the graph, and I think it's just taking advantage of the industry itself and how it's moving here. So that's GEVO. Again, it's not going to make ruler stocks or premier growth stocks or whatever search you might use on a more prudent type of search, but it's a stock I've been following for a long time. I've been in and out of the stock myself. Started following the stock when it was trading at 98 cents, to be honest with you, And so it's had a nice move and a run ever since. So I choose this one because because along with XROFF, it's or XRO Technologies, it is a different facet of clean energy. It's not just, we've been hearing a lot about electric vehicles, but this is a little different. That's why I choose it. I like the graph. So there's some technicals here that look good. The fundamentals, I can't really defend, but I like the stock and the movement of the stock.
Glenn,
You guys can have it.
I like the stock. And interesting, even when we use stochastics, I think stochastics should be used more as a heads up indicator. It's price action that you take advantage of. And as I look at this stock over this time period, every time it gets to that overbought level of 80, the stock pulls back, meets that 20-day exponential moving average, and goes back up. Each time it pulls back to that 20-day. It hasn't broken below that 20-day. So if history is going to continue to repeat itself, this stock should continue to move higher, even though it's getting into that spectrum again right now of right at 80. The stock could be hitting up against resistance. Price will tell. And up day today, wick at the top, a bigger wick at the top than at the bottom of the candle. The stock is showing a little bit more selling pressure, but the stock is looking at a level of being overbought, and RT is right at 2. So I like the stock. I love the graph, bottom left, top right. I would just time when to get in, and that's actually as it takes out that high. Steve?
So, I'm sorry.
Go ahead. Whoever.
Go ahead.
No, I was just going to say, I mean, so I'm not sure which, again, I don't use stochastics. It signals overbought, but we have broken resistance. So we know that for now, the sellers are out of the way. Is there selling pressure on it? Yeah, it's off its high of the day, still up on the day. I like the idea. Now, if we can get one more day above that resistance, right? If we can get a second day where it opens and closes above that resistance, that would be a really strong, in my opinion, technical view. I would outweigh that over any stochastics overbought signal, but that's just me.
I got you. No, I hear you. Steve?
Those were exactly my thoughts. So thank you, Jim.
Well, the notes you wrote me those notes before we came on.
I would only look for the higher open, but yeah, exactly.
It's a good thing that we've got no combustion, so we can keep on going.
It's not combustible yet.
Non-combustible. All right, Jim, go to the next stock.
All right, so that's GVO, and anyway, it's just I like the idea of a separate thing there. So the next I'll go to, I'm going to close the graph, and we'll go back. And XROFF is, boy, what could I say about it? XRO? We call it XROFF, but it's XRO Technologies. The F, as I said earlier, it's based in Canada. It trades for our Canadian friends up north. It trades and based in Canada. There's a history to this stock, and not to go too far into it, but I don't know, what was it back? We determined it was like back in June of last year. Dr. D had sent an email out saying, "Hey, take a look at this stock," and that was back in June of last year. We watched the stock; it continues to grow. This is one of those stocks where you look at the story behind what they're doing. When you look at the current headlines and electric vehicles, and again, I believe that it's not some fad that's going to go away here. This is the future, I believe. And so a company like XROFF, and we used the quote earlier, I don't know if it was Ray or Steve who said the quote. I'm going to go ahead and jump out and use the quote from David Tepper, the great hedge fund guy and the owner of the Panthers now currently, I believe. These guys, we were talking about a quote. He said, "You should be out purchasing the supply stocks for electric vehicles as opposed to the electric vehicle companies themselves," which, I'd kind of scribbled down in some notes, something similar in that what XRO Technology does is they're able to, and I'm certainly not an engineer, but they have what's called a coil driver, for example, that allows the electrical vehicle batteries to perform better. So they're enhancing it as opposed to developing the electric vehicles. They're enhancing it, and there's a lot more to it than that. And I'm hoping Steve will jump in and talk a little more about the that side of it. But For instance, they are right now supplying to these large commercial vehicles. They're beginning this agreement and this test period, or whatever you want to call it, things like UPS trucks and these commercial vehicles that are going to electric batteries, like many government cars will. So the electrical vehicle companies will do well, but a company like XROFF is going to come in and enhance that as their way to profitability. And so the stock had a nice bounce yesterday. The other story behind this, if you look through the headlines here, they're putting together a management team of folks. I don't have all their names exactly, but from Audi, there are high executives from Audi, from GM, Ford, that are joining the company on their board of directors, and so they've got a lot of experience there. And I think the idea of electric vehicles is not going anywhere. I think that it's going to grow. GM, Ford, obviously there's Tesla. There's a place for a company like XROFF Technologies to enhance that. Okay, and so I think that's a great reason to consider. Now, once again, the fundamentals, I can't defend the fundamentals here, right? But that's okay. Even the earnings growth rate is negative here. But again, if you follow the company and you follow the leadership team and you understand or believe that electric vehicles aren't not going away, XROFF Technology is going to play a big part. So if we take a look at a graph, just real quick, again, the technicals aren't going to be super supportive here either. But the last 4 or 5 days, it had a nice run. It found support here. It bounced off support. Again, really the one technical analysis tool that I use, not that it's better or worse, but is support and resistance. Where are the buyers? Where are the sellers? That's what matters to me. And the stock, found support down here and has had a nice run, I think, based on some of the headlines and some of the progress that they're making in the industry. And so that's my second pick for our clean energy stocks.
All right. Just to back you up, and I think Steve is really going to do a good job explaining what XROFF does. It is not recreating the wheel. It's pretty much making the wheel better. And especially if everybody is trying to reduce their carbon footprint, especially when it comes down to EVs or electrical vehicles, at some point in time, they're going to have to come to XROFF with all of the stuff that they're doing. And I want to add, there's an XROFF update on the coil driver for electric cars with Potentia. So another company, 100-volt coil driver ready to ship to Potentia. Testing complete for the Potentia electric motor integration with the 100-volt coil driver. So the news it's sort of like the hits just keep on coming when it comes down to XROFF as they're getting more and more notoriety because of the work that they're doing on the electric motor. And, that little bit of a pullback that you're seeing right there, I'm thinking nothing more than just some profit taking. The stock gapped 1, 2, 3 days in a row, 4 days in a row. And, the stock is on the move. There's no ifs, ands, or buts about it. The stock's on the move. But when as Jim so eloquently said, this industry, no matter what portion of the industry you look at, is not going away. And this is definitely a stock to keep your eyes on. Steve-O?
Yeah, so look, none of us are engineers, certainly not electrical engineers or anything of that nature. Just to try to explain the coil driver technology a little bit more carefully, realizing what you really want to do is go to Twitter. They've got a Twitter page, XROFF Technologies. Sue, the chief executive there, the CEO did a beautiful presentation here recently where she really laid out a lot of things that are very interesting for even the coming year, but also discusses the benefits here. Now, XROFF, to be totally clear, will be beneficial in more ways than even just EV vehicles. But they're looking at contracts on both bikes, motorcycles, cars, big, and she really feels extremely exuberant about the potential for the large vehicle, because those vehicles are really going to suck a lot of battery power, and really the battery is going to be potentially a major obstacle in that. If you live in San Francisco, for example, and a city bus is trying to climb all those hills, you really need something to prolong that battery life. So what the coil driver does really is two things. It makes the motor more efficient, and you can have a smaller motor footprint. It actually totally eliminates the gearbox. And at the same time, it has a smart technology software type system that will pull from certain parts of the battery when needed to try to spread, some of the usage out and create longer lasting battery life, essentially. Okay. Now, again, go do your do research. We are prone to make mistakes when we start talking about things that we're not, responsible for ourselves. But it is a very interesting company, a company that could have a wide-ranging array of product. They're working not only on the coil driver, but some of these other things that we've hinted at. A very interesting company indeed. This is more of I want to just take a slice of money if I'm going to do this and just kind of pack it away and see what happens over the next 5 years. That's kind of what you're dealing with this company here. Now, I will share with you two things. They are expecting to be uplisted on the Toronto Stock Exchange Big Board, potentially as early as this year, and the NASDAQ potentially as early as this year, but maybe even more likely by next year. Okay, so those would be huge watermarks for them. They have begun to garner some institutional interest. Let's leave it at that for now, and they would get a lot more of it if they get on those two exchanges. So it's very interesting from a lot of different perspectives. What we call this in VectorVest is a speculative position, but it's one where we probably overkilled the story on why of the speculative space, it may in fact be one of the best bets you were lucky to see. I'll leave it at that.
Yeah, I think that's a great summary. I mean, the way I try to paraphrase it is they're going to take this industry of electric vehicles and they're going to optimize what the electric vehicles are there to do. And as Steve said, these larger vehicles, the commercial vehicles is what the story I read. And some, two quick things I saw.
Understand this. You've got an electric motor in your electric shaver.
Right. So even beyond, right. Even
dams, trains, everywhere.
And so just two quick points. I saw a couple of comments come through the chat. Number one, I think it was Phil. Is it a long-term buy and hold? And I think Steve just answered that. I just wanted to comment for me. It is. That's what I'm looking at. Someone else commented on the bearish candlestick right now. And listen, it's just so for me and the story behind the stock, this means absolutely nothing to me. This red candle that's up right there. All it does for me is constitute a buying opportunity. If this should fill some of these gaps here, all it's going to do is create a better buying opportunity, in my opinion.
From that perspective of is it a long-term play or not, I think that as well as Steve has put it, understand what this stock is about to do tells you that this is probably a long-term play. Because of the nature of what this stock is going to do is where the long-term play comes into play. So I'm all on board with it from a long term. And as Steve said, it's speculative. So am I going to throw all my money, all my retirement money behind it? No. But can I make some good money knowing what this stock is, capabilities are? Heck yeah. Heck yeah. All right.
And Glenn, can I just say one more real quick thing?
Yeah.
There are, and again, I'm using this as the idea. We talked about GEVO and the biofuels, XROFF helping with the electrical side of it. I'm not going to get into some big analysis, but I just want everyone to know there are more than 5 or 6 stocks that you can look at. This next era NEE. And again, I'm not going to go all into it, but take the time to understand they're out there. There's another one, NEP.
Why don't you open up the viewer? You wanted to do. Why don't you go do that?
Well, I don't. It's just I just want to make the point that these are turbine. One of them's turbine. One of them deals with using water as far as clean energy goes. And I really just for something for the folks in the chat room to who are taking the time to be here. They can look up here and see some good. I don't want to take any of Steve's time. I just wanted to throw out the idea of kind of what my narrative was trying to be, is that when you just say clean energy, it doesn't just mean solar, it doesn't just mean electric vehicles.
Right.
There's a lot to it, and that's really the only point I wanted to make.
Got you. All right. Well, the next person to come up is Steve Chappell. So I did all of that for Jim, and I say it's Steve Chappell. Steve is actually a good friend of mine and one of my mentors here at VectorVest, and he's going to now give you his play, his two stocks as well. So Steve, take it away, buddy.
Thanks, Ben. I actually much prefer that kind of introduction because now I can over-deliver compared to the way I was introduced, right? Hopefully. So yeah, let's take a look at some things here. I'm going to go ahead and request control. And all right, thanks, guys. Close this up. It's hard for me to see exactly where I'm going. All right, cool. So back to our list. I'm going to go right to the top here. And I was thinking that, Jim, as you were talking, I was like, wow, you know, what happened here? I had the fortunes of picking first, okay? And so what happened is Jim's brain got transplanted into mine somehow, and mine got transplanted into his. And that was only by nature of me picking first. Otherwise, I probably would have had the same two stocks he had, and he probably would have had pretty close to the same two stocks I have. But anyway, you know, I really love renewable energy. I think it's the smartest pick in the space for a lot of reasons. And I'm not going to go into the depths other than what VectorVest says. I'm just going to try to stick right to the VectorVest core analysis here because that's all you need. You know, it's cool that you make a bio diesel fuel. What's even better is it's not an upstart. You know, they've been doing this already for a long while, long enough to get a relative safety score up into the blue chip range in the 1.4s. You know, so not only do they make money quarter after quarter after quarter, year after year after year. And ultimately, you know, that's what's going to carry stock prices from the $14, you know, up to the $400 per share. At some stage, earnings is the only engine that's going to get you there. You know, so that's important. What's really nice, as I mentioned, is the consistency in which they supply that improvement on earnings. And what's really nice to have is an even higher relative value. To be that safe in terms of earnings consistency, but then also to have extreme earnings growth is tremendous. I mean, it's a beautiful combination. We call this the best of both worlds. This is a prudent investment. Okay, it's also, quite frankly, could fit into almost, I would say anyway, you know, your conservative approach, which makes it super nice. So whether you're concerned with capital preservation or capital appreciation, here's an instrument that kind of does all of it, right? What's surprising and seldom happens to these kinds of stocks with that kind of quality is they move up like a rocket ship, you know, so it's also got an RT of 2. And I want to clean this up. Some people always say, well, if RT's already made it to 2, that's as high as it can go, so it's only going to go down from there, right? Well, not necessarily. I've seen stocks with RT values north of 1.8 for months, and I mean months, many, many, many months. And I'm going to tell you, you never wanted to sell that one, okay? So just remember, that's a measure of how fast the stock price is actually rising on the short term. It's not like a stochastics where, oh, wow, now I'm totally overbought, you know, no. It's telling you that the stock is on fire. You know, that's the message. So you got a 3-time winner. You got a stock with good upside, well, tremendous upside potential, tremendous safety, and tremendous timing. So hard to beat. That gives it the top VST score on the list. It's also got a comfort index rating of 1.81, which is that's the top, you know, top of the class. When you get up in the 1.8s, 1.9s, that indicator I've never seen a 2. You guys might have, but I've never seen a 2 on CI. But CI, think of that as the longer term price action, okay? What you're going to have is a very stable 1 to 2 year chart on renewable energy as well. So we'll take a look at that one first. Then we're also going to take a look at Enphase. Enphase is a company that I don't know how long you guys have been coming to the hot stock picking panels. I think I started talking about it on the hot stock picking panel when it was around $40. give or take. You guys can go back and check me out. I might not even be doing myself justice. But we started talking about it in another trading situation we have here at VectorVest called the Jockey Club when it was around $11 a share. Okay. Right now it's clocking $211. They had an earnings report last night and they blew it out of the water again, which they have done consistently since they were $11 a share, without hardly ever missing a beat. Now this stock at this point, because it's been such a tremendous growth story for so long now, you are starting to get to a pretty high price compared to valuation level. Now that's not necessarily, well, it's not a deal breaker. Many great caliber stocks trade well above valuation. Why? Because they're great. So they trade at a premium. What that means is we're not the only ones that know about Enphase anymore. I can assure you, we were some of the first ones to know about Enphase as well.
Amen to that.
We started talking about them at $11. All the guys that know about them now are smart only because that's $200 ago. But anyway, it's got nearly the same kind of fundamentals. Now I will say this, Enphase was running 1.7 RVs hundreds of dollars ago. Now that RV has cooled down a little bit, but you're still clicking along at a 131 there. You've got a 135 RS. That number's on the way up, not the way down. So RV's cooling, but RS is strengthening, okay? Relative timing coming in at 1.9. So all in all, I still like renewable energy as my favorite. Enphase is near and dear to my heart. I've talked about it an awful lot over the last 3 years. Anybody in this room that knows me or has heard me speak at any time probably has heard me say that every time we've talked. But let's take a look at the two stocks, okay? Now, before I do that, just real quick backstory on Enphase. Their real advantage, this is solar power, okay? And they do inverters. Their real advantage is scalability. Ease of installation and scalability and rapid, deployment of their technology. And their technology is actually pretty well top of the class as well. So a lot of things to like there. They can grow and they can grow fast and they can keep doing it, and faster than anybody else as far as I know. Okay. So with that being said, let's take a look at these two. Right click. Again, we're no experts. We only know what we read and see and experience, as well. So here's Enphase. I'm going to go to 3-month charts on these. And so Enphase had that big announcement. Today's kind of been a rocky day, right? It's been an interesting day, hasn't it? I don't know about you guys' portfolios out there, but mine kind of went all over the map today. Fortunately, it's settling back on the north side of the Mason-Dixon line, which means that's good. Okay, we need to clean that up. It's getting back towards where we started, actually, which is great. I know not Bernanke. Powell was coming on it too, and I think maybe there was some nervousness there. Whatever the case may be, things seem to have settled out, but I think that's had some impact on what was a really good report for Enphase. They are up nicely, but they're a little bit lower than where they opened, which is a bit surprising. Now they are contending with prior swing high resistance at this point. It's tricky. It's one that I think for the long term, you got zero worries here, barring a market decline of substance. No stock is resilient to that, no matter who they are, any of the stocks on this panel. Right, so barring that, again here, I don't think there's necessarily a bad entry, certainly on the back of another strong report. But I would at least look for higher price action. I'd at least look for a higher open, some kind of movement that springs it back to life a little bit, at least in your own mind. And I think that's all you really need. It would be really nice to get above resistance, but just like with Glenn's Jinko, fundamentals matter. And so while we were looking at talking about head and shoulders and consolidations, at some point those fundamentals kick in, and so both of these, both Glenn's Jinko and Enphase likely go higher, certainly over the long term they do. Okay. So again, I'll just leave it at that on this one and let you guys put in your own 2 cents, but I'll also throw earnings on here just really quick and get rid of all this technical mumbo jumbo and kind of make that the highlight. We talked about earnings consistency. I didn't break down earnings in this one, so if one of you guys wants to do that, you can. Where is that other stochastics there? We get rid of that. There you go, Jim. Take it away, buddy.
Yeah, Steve, I know, I see some people typing in the chat box, and they've talked about, I got an echo or something, and they talked about, you know, buying Enphase and holding it for a long time and having it. And I remember being on the panel when you first introduced this, and it's been fun to watch. And I don't really have anything to add. It's just when you can get that kind of growth, that kind of comfort index, that kind of move on the stock, and also have the safety that goes along with it, just like renewable energy is. Yeah, I mean, these are the type of stocks I talk about on Tuesday afternoons in the coaching group for retirement portfolios. So but you get the growth as well. They're unbelievable companies, and no one explains them better than you.
All right, so I'm going to address that. For anybody saying, one, how much higher can you go, and two, if this is a stock that you want to hold for the long term, the stock can go as high as it want to go, number one. Number two, let's put this into perspective from an analysis perspective. What's earnings per share doing? Growing. What's earnings growth rate doing? It's falling a little bit, but still growing their earnings at a clip of 30% a year. That's higher than a lot of the stocks that are in the database. The stock is moving a little bit sideways. Steve is right. Wait for that stock to hopefully get higher than the high. But, you hear the terminology that the graph is worth 1,000 words. That's a 3-month graph. The graph is definitely moving from the bottom left to the top right. And even when it pulls back, it doesn't, most recently, it's not pulling back a ton. And you know something, if this is more like Jim's type of retirement stock, you can give this stock a little bit more room because it is such a good fundamental stock. So that's to answer that question, because I'm looking at the chat too, and the chat is like, well, how high can it go? It can go as high as it want to go. Do you want to hold it long term? The analysis says, yeah. So there you go.
And learn how to buy protected puts.
Well, there you go, in case stock pulls back enough. Either that or sell covered calls. Or come, so either way. The puts is full insurance. The covered calls is just a good way to generate. You already know that. So, all right, Steve, next stock.
All right, but just real quick, we talked about EPS, and I'd like to show it in a little better light.
There you go. Okay, that's a much better picture.
If we're going to address, can it go higher? The answer is just keep your eye on earnings per share. If it continues to climb, then the answer to your question is yes, and it is really that simple, because that's what drove it from 11 to 200. So if this kind of earnings continues, that stock price can literally, it's almost a 1-to-1 correlation. There's no stronger correlation in all of the stock market than earnings growth to stock price appreciation. Okay, that is the engine that drives the bus, period. Our EPS is a 1-year forecast. They're making more money a year from now than they are today.
Amen.
Now you tell me, can it go higher? If they're going to be making more money a year from now than they are today, can the stock price go higher? And if you answer no, I can't help you.
Yep, and that's why I wanted to address that, because the chat is coming in asking that. I'm like, the analysis is right there, folks. It's right there. And it's not like we're saying, well, I think it's there. The analysis is right there.
All right. So let's go to the next one here. Well, if you didn't like that one, you're really not going to like this one. So this was my favorite pick. That means we're going the wrong direction. There it is. All right, so this is renewable energy here. Now, the nice thing about renewable energy, well, a couple nice things. One, earnings growth here is also tremendous. Now, they did stall a bit. Notice how when the forecast started to weaken, stock price weakened, right? And then as the markets are always looking forward and realize that earnings were going to begin chugging again, that's when the stock price really took off, okay? So again, just keep your eye here. Keep your eye on the right-hand edge of the screen. As long as that EPS keeps rising on a week-over-week basis, on a forecasted basis, you're in good water, And don't get all bent out of shape about a little penny or two wobble in any direction. I mean, we're talking about some consistent movement in a certain direction, okay? All right, now, in terms of the stock itself, obviously it's moving up in waves, so we've got to realize what you see on the chart is what you're gonna get, okay? And we have a stock here that really loves the 20. And a lot of stocks that go high momentum, usually the 20 is about the best. Well, it's about the best thing I've ever seen. Okay, and I wasn't the smart one that discovered that for myself. I actually learned that when I was studying a very smart trader. Her name is Linda Bradford Ratchke. Okay, and she calls this the Holy Grail. We don't have one of her favorite indicators on there called ADX, but I'm not going to teach a class today. And part of the basis of her setup, though, is just price in relation to the moving average. So what we know are a couple of things. Price is really moving our way, but it might be a bit hot right now. And what does it do after it goes up about 4 or 5 days, sometimes maybe 6? It likes to pull back to this average. So if you want to get off to the best start possible, it won't take very long. Just wait for this stock to pull back to the 20. You don't buy it on the KISS. See, this is a KISS candle here. Price touches the 20 average. They call that KISS in technical analysis, at least, most of the people I know. Now, off a KISS candle, you buy the next day if price goes above the high. That'll get you off to a good start 80% of the time, if I had to guess, which that is a guess. But it's going to get you off to a lot better start than just taking a swing at it tomorrow because it's going higher, because when you come back and kiss that average, as we've seen before, that's when it likes to go on a consistent run. And again, right now we're in the midst of one, so I might wait a little bit, but this is my favorite pick in the whole space, and I'll throw it over to you guys.
This reminds me of a song. For all of you who are in my era of R&B music, remember the song? Everybody dance. Hoo, clap your hands, clap your hands. That's what this stock makes me want to do. This stock makes me want to just get up. You make me want to shout. Look at that 20-day exponential moving. Man, there's nothing bad about this stock. Look at that 20-day exponential moving average. Steve talked about the KISS. Look at it, keeps coming right back to regressing to the mean, if you want to look at it from that perspective. I don't know if I'm using it right. It sounds good. Looking at that 20-day exponential moving average, it's doing a beautiful job coming down and saying, hey, how you doing? Gotta go. It does it again. Hey, how you doing? Gotta go. And I'm with him in regards right now. Right now, it's probably got to come back a little bit. But look at the 3-month graph. Beautiful. Look at the earnings per share. Beautiful. There's nothing bad about this stock. It now just needs to be time. This stock gives me happy feelings, and I think that Steve is right. This is definitely one of the best stocks in this space. He picked first, so he got to get it. Dang it. And that was that. But man, I love everything about this stock. All right, that was a lot of energy. I gotta go take a nap now. So Jim, it's up to you.
So Glenn just gave away the new technical study we're putting together. It's hey, there it is, gotta go. We're gonna add it into the technical studies. It's gonna be there. It'll take a while to get in, but
I love that, Jim.
All right. Anyway, yeah, Steve did get the best stock here. There's really nothing that I could possibly add. The relative value safety numbers, all of the numbers. It came up. I will just say, the end of last year, it came up in our Tuesday sessions when we do our buy rights and our covered calls. It came up twice. It got a little bit volatile on us, so we had one losing trade, but we also had a winning trade. But just the process that we use to find the quality stocks for our buy rights, that renewable energy comes up, all the time. Just tells me that, I know it's a good quality stock. And, again, for me, earnings per share is what matters. You can put whatever technical study you want on the graph, but that's a good company. I'll leave it at that.
All right, listen, I think we did another good job as far as providing great stocks to either love or leave for this hot stock panel. I know that everybody out there, for the most part, should know that this space is a hot space. We talked about why it's a hot space. And if nothing else, if you're not trading any of these, you now have some opportunities. We've given you entries. We've shown where to look at for exits. I don't know what more we can do to help you in regards. Now, granted, there's a lot of other stocks out there, and I think Jim was right on point when he said it's not just the EVs, and I think a lot of emphasis looks at the EVs. It's not just solar. I think a lot of emphasis is on solar. But Jim did a great job. You got wind, you got turbine, you got water. Clean energy is a big space, and there's a lot of stocks to take advantage of. I am still going to go back to the ICLN. I think that's a great way to play the whole space. And we've given you individual stocks to take a look at as well. So I want to say thank you to my esteemed colleagues. And yes, I got a little bit out of the box. I got a little energetic because I think REGI deserved it. And what was the new technical indicator, Jim?
I have to remember what you said.
I forgot what I said.
There it is. There it is. Gotta go.
There it is. Gotta go. I'm loving that. I am loving that. All right. So with that being said, if you like today's content, hit the like button. We got a lot of folks up in the room. If you really did like the content, show us. If you are here and you are not a subscriber to the channel, and if your subscribe is red, hit it. All right, subscribe to the channel. This is the kind of content that we give on an ongoing basis. I got you. We give on an ongoing basis, and we'd love for you to come back, all right? Just to let you know, the winner of the mug, which looks like this, all right, there's my VectorVest mug. The winner of the VectorVest mug happens to be George Deal. George Deal, and you have to send an email to connect@vectorvest.com to claim your mug. Again, it looks just like that. All right, there it is. Looks just like that. So, or if you need to, you can go down to our VectorVest store and purchase your own. All right, and again, Steve, Jim, outstanding job. Thank you for being here. And everybody out there who's out there, thank you for supporting the channel. Again, hit the subscribe button. And last but not least, a lot of these stocks we are looking at from a swing trade perspective, longer term. We have a course to help you to find stocks outside of just this industry from a swing trade perspective, and that is our precision swing trading course, www.vectorvest.com/PST. I'm not trying to shove it down your throat and make you buy it, because I'm going to get that. Oh, you guys just try to sell everything. Get over yourself. This is information that we can use to help you, and we offer these courses, all right? So I'm putting that out there. You don't have to take it if you don't want to. Just giving you the opportunity to know that it's out there. All right, so George says, will do. Congratulations to you, George. Thank you guys for being here and supporting the channel. How many likes did we get today, Joey? 130? Well, it is what it is. Maybe you didn't like what we said. It's all right. I said, like, it's all right. But thank you for being here. We're getting ready to go. Adios, arrivederci, ciao, au revoir, sayonara, aloha, salam, shalom, namaste. We're out of here.